Hello everyone. Today we are going to discuss why takeover of Credit Suisse by its larger rival UBS has caused fear among AT1 bondholders. Before we begin, let's try to understand what exactly are AT1 bonds and the risk associated with them. AT1 bonds, also known as contingent convertible bonds or COCOS, are a type of debt issued by a bank that can be converted into equity if the bank's capital levels fall below regulatory requirements. They were introduced after the global financial crisis of 2007-08 when banks were asked to operate using their own permanent capital instead of borrowed capital. To shore up their Tier 1 capital, banks were allowed to raise AT1 bonds from investors. These bonds pay regular interest, but they have no maturity date and are a permanent part of the bank's capital, similar to equity. They also have higher rates than Tier 2 bonds, and the issuing bank has the option to call back the bonds or repay the principal after a specified period of time. AT1 bonds are attractive to investors because of their higher yields compared to secured bonds issued by the same entity. Individual investors can also hold these bonds, but they are mostly preferred by high net worth individuals, HNIs, who are willing to take on higher risk for higher yield investments. However, there are also risks associated with AT1 bonds. Firstly, the issuing bank has the discretion to skip coupon payments. Secondly, the bank has to maintain a common equity Tier 1 ratio of 5.5%. If this ratio falls below the required level, the bonds can get written down or converted into equity. Let's discuss the impact of Credit Suisse write-off on AT1 bonds. Credit Suisse's decision to write down around $17 billion in additional Tier 1 bonds has caused significant damage to the market as indicated by affected price of AT1 bonds issued by other banks. The write-down was the largest in history and upended the expected pecking order, placing stockholders above AT1 bondholders. The revelation that stockholders may be left with something and COCO holders with nothing is contrary to the understanding many buyers had about what they were purchasing. This could spell doom for the asset class, and the future of AT1 bonds is uncertain. Commentary about the future of the asset class ranges from bleak to apocalyptic, with Goldman Sachs warning that it has become difficult to assess the spread between yields on AT1 bonds and different forms of high-yield credit due to a lack of clarity on future resolutions. Thank you for watching this video. I hope you found the information presented here useful and informative. If you have any questions or comments, please leave them in the comments section below. Don't forget to subscribe to our channel, Prepify, for more valuable content related to competitive exam preparation and general awareness. Until next time, keep learning and stay curious.